Alright everyone, and welcome back to the channel for another on-chain metrics update on Bitcoin. So in the video I just uploaded on my channel, we talked about everything you need to know from the GDP report, the confirmed recession that we're currently in. We looked at the stock market, like the dollar, stock market indices being the Nasdaq, SPY, SPX, and obviously we looked at the Bitcoin price action, talked about what I see playing out in the immediate short term, and the price targets I'd need to see getting broken to become even more short-term bullish. However, while I am bearish in terms of the pure TA, there are a bunch of signals on the on-chain metrics which historically have never been wrong. Things like the MVRV Z-score, a lot of these are not yet firing bullish, but they're very, very close to firing a bullish bottoming signal. And once again, my friends, when these fire bullish, and if they do fire bullish, I will be flipping bullish with them because so far they haven't been wrong. So let's look into a couple of these on-chain metrics. Once again, leaving the TA aside for this video, we're purely going to be pretending we live in a world where there are no price charts and there's only on-chain metrics charts. So put on your on-chain metrics hats and let's dive in, starting off with the MVRV Z-score. This is a very, very simple indicator which tries to identify periods in which the BTC USD price is either extremely overbought. If it's overbought, then the Z-score will come up to the top of this red box. And if it's extremely oversold, the MVRV Z-score will come all the way down to this green box. Now, the way that this works is very, very simple. It's simply a standard deviation test, pulling in data from the market value and the realized value. You get the MVRV score by basically this equation over here, which is, the market cap or the market value in USD minus the realized cap in USD, also known as the realized value. And then you simply divide that by the standard deviation of the market cap, and that gives you the MVRV Z-score. And you can see MV is the market value and the RV is the realized value Z-score. So it's simply plucking data points from a plethora of different options over on the market value and the realized value for the Z-score. So with that being said, like I said, we're not too interested in it identifying periods of being overbought because we're currently nowhere near being overbought. So if I make a video about how to use this indicator more in depth, then I'll definitely explain that. But for right now, we care that we're in the oversold region. So within this, you can see, looking at the Z-score, the oversold region is when you are between the ranges of 0.1, and technically it can go infinitely to the downside from there, but the Z-score for the minus zones actually tops out at minus 0.4. And you can actually see, if we refresh the page once again, that we have topped below these Z-score values before. So once again, we're not interested about the overbought regions because we're clearly nowhere near overbought on the higher time frames. In the lower time frames, we're interested in the fact that we have dipped into the MVRV Z-score for the oversold region. Why are we interested in that? Well, let's look at what happens with every bear market low so far. So 2011, the Z-score dips into this zone and it actually capitulates below the green box. What happens in your next bear market in 2015? The Z-score dips below this green box and once again heads back down to that negative Z-score valuation. What happened in the 2018 bear market low? What do you see? The Z-score topped out just below the green line on the MVRV Z-score and the price action bottomed. And then you can see pandemic scare. We returned to that MVRV Z-score, didn't top out below the green box. In fact, it looked like we rested at around about 0. And then what do you see that we're doing right now? We're once again sitting in this green box. So why am I highlighting this? Well, number one, every single time we have a bottom, the bottoms happen while we are in this green box or below this green box for the MVRV Z-score. And what happens as soon as we leave the green box for the MVRV Z-score? Well, as soon as the Z-score leaves this green box to the upside, the bottom was confirmed at this point in time. So it's got 100% historical accuracy based on this indicator. Does this mean you can take it to the bank every single cycle from now on? No, I wouldn't say so. Trends are meant to be broken. This is not going to last forever. However, at least based on previous data points that we've got, this has called these bottoms with 100% accuracy so far. So once again, 2011 bear market, the Z-score leaves this green box to the upside, bottom is confirmed. Z-score leaves this green box to the upside, bottom is confirmed. You can see these massive rampages to the upside that we have once you leave this Z-score range. Now, once again, 2018 bear market low, Z-score bottomed out at minus 0.47. We subsequently pumped back above these, and when the price action, I recognize this price for Bitcoin, this was around about 5,000 after the bottom was in at around about 4,000. You know, you might have missed out on the first 15-20% of this move, but realistically, if you did buy when the MVRV Z-score pumped above this green box, you made away with massive gains every time. I mean, look at this pandemic scare one. This was just so quick. From March 2016 all the way up to just March of next year, this did a incredible return. In fact, this did just over a 10x return if you time this right. So the Z-score, a very powerful indicator. Why are we talking about this right now? Because the Z-score is steadily approaching the top of this range, and if we keep on getting bullish price action like we're seeing in the past couple of days in the lower time frames, this can definitely tip the MVRV Z-score to the upside. And once again, my friends, this is an indicator which is useful for pointing out periods in which Bitcoin is overextended to the upside and overextended to the downside. Now, within this chart, on the MVRV Z-score, you can see this orange line right here, and this is the realized cap or the realized price. Now, the realized price is also a very simple indicator. This is basically, instead of Bitcoin's actual price at this moment in time, it's on average the price that everyone paid for their coin. So it's simply the price of every Bitcoin at the price that it was last purchased, divided by the total amount of Bitcoins in circulation. And with that, it takes in data points from people buying Bitcoin at $1,000 that haven't sold. It takes in data points from people buying today at these prices, and it takes in data points from people buying Bitcoin at, you know, 60,000, 40,000, 30,000, and it takes the average of these buy-in prices. So you can imagine this as the average price that Bitcoin was purchased at. And with this realized price, just like the MVRV Z-score, we'll only spend a minute on this one. It's very simple to understand. Once you capitulate beneath it, in this instance, this is going to be a moving average, or just not necessarily a moving average, more just like a line of data points. But within this line of data points, as soon as you capitulate beneath it, the bottom is very close. And this makes sense because when the price action moves beneath the realized price, on average, the people that have got into the Bitcoin network are not in profit. And as you can see, we spend most of our time above this orange line, meaning that if you're in this cryptocurrency for the long term, you know, it doesn't matter whether you got in the structure at the tops or the lows. Eventually, when the price action starts crossing back above this realized price line, the gains are soon to be coming back. And as you can see, you know, the price spends very little time beneath the realized price, and that is because Bitcoin's price action, not on the daily time frame, not on the 4-hourly time frame, not on the hourly time frame, but on the weekly and the monthly time frame, it's not very often that Bitcoin spends too long being bearish. And obviously, we're in a bear market right now, but within these previous bear markets, you can see the realized price was the last line in the sand saying, hey, as soon as you cross beneath me, the average person that's been getting in on Bitcoin that hasn't got in at all of these cheaper prices down here that are obviously going to remain in profit forever, these people are out of profit. And it is not very often that the Bitcoin network is not in profit in the higher time frames. There's a lot of charts that show this off, but nonetheless, this is one of my favorite ones with the realized price. Why I highlight this is because every single time we've crossed beneath this, it's been a bear market low or a pandemic scare, and there has not really been any time, because the low was in down here. So technically, you did have a fake out above this, but then you just made a higher low from let's see where this was. So I know this was a higher low because I know this was where the price action was. It's a little bit hard to see over on the price on the look into Bitcoin charts. But once again, every single time you cross beneath the realized price and head back above it, the bear market low is in. The bear market low was in after we crossed below the realized price over here, over here, over here, over here. And technically, we're moving up above this right now at this moment in time. So this is definitely a less powerful indicator than some of the other macro ones like the MVRV, but this is also a very powerful indicator. Now, let's finish off on the hash rate. So I was previously talking about the hash ribbons and how this is one of my favorite indicators to call for a miner capitulation, when miners are turning off their equipment, when mining becomes too expensive, or when people are being exodized from the Bitcoin network, like when we had the China exodus. You see these hash ribbons capitulate, and these are signs of, once again, miner exhaustion. Miners are selling for one reason or the other, or they're turning off their equipment. Keywords there, turning off their equipment, no matter what they're doing, whether they're selling, being exodized from their country because you can't Bitcoin mine anymore, they are turning off their computers. Hash rate goes down, Bitcoin price typically goes down, as the hash rate is a leading indicator in the higher time frames for the Bitcoin price action. Now, what we've actually been seeing on the hash rate is a massive deviation, where the price has been moving heavily to the downside, but the hash rate just doesn't care. It's just been constantly moving up, making new higher highs every couple of months. And right now, the hash rate has just taken a massive explosion. In the past 6 days, it's moved up from a hash rate of 188 million terahashes per second to 206 million. So definitely a massive run to the upside, huge for the Bitcoin hash rate. And because of this, the hash ribbons are starting to turn up. And if you do remember, I made a video very recently about the hash ribbons 6 days ago, where we were looking at these, where they were turning down very quickly, and conveniently in the past 6 days the price action, or the hash rate rather, started to move up to the upside. Basically, as soon as I made the video, the hash rate just turned tail and started to run up. And what I said, the main takeaway from the hash ribbon video, was look at what happens when the blue line, which is the 30-day moving average for the hash rate values, bottoms. That is when the price action bottoms, and after the hash ribbons on the 30-day bottom, they start to turn up faster than the 60-day because they're a shorter term moving average. You have the hash rate take a massive run to the upside, and the 30-day is going to react to it a lot quicker than the 60-day. And once again, every time you see a cross of the 30-day moving average above the 60-day moving average on the hash ribbons, you just become exponentially bullish. And this is another signal which has only been playing out since 2017, so take that with a grain of salt. We don't have the highest majority of data points on this, and there have been times where this has been quickly spooked out, like on the pandemic scare, and more or less wasn't useful. So this, I would say that this wouldn't necessarily be too useful in a black swan event, because you're using things like the 30-day moving average, the 60-day moving average, and you know, by the time we had this pandemic scare, within 30 to 60 days we were out of this, it was done. So I wouldn't use the hash ribbons for black swan events, but I would use it for bear markets and mass capitulations below the mean. And this is what we're looking at right now on the lower time frames. Once again, resetting this chart so we can zoom in again, you can see the hash ribbons, which are, or the 30-day hash ribbon, is right down here, and it looks like it's starting to turn up very strongly. Bear in mind, the hash rate is still very strongly moving to the upside. The 60-day looks like it's going to turn down a lot quicker than the 30-day, and there's no guarantees that this is going to cross bullish. I want you to recognize that. I'm not saying there's a 100% chance that all of these are going to flip bullish very soon. I don't have a crystal ball. I don't know whether they're going to flip bullish or not. But what I can tell you is by looking at previous trends on things like the hash rate, hash ribbon indicator, the realized price, and specifically the MVRV Z-score, should I say specifically the MVRV Z-score and the hash ribbons indicator, looking at these on-chain metrics, these are both undeniable proof when they do flip bullish that the bottom is probably in. So I will be looking at indicators like this. Once again, none of these have yet flipped bullish apart from the realized price, which I would take with a slightly higher grain of salt, because you're simply looking at the average price at which Bitcoin was purchased at. Yes, this has been a good indicator historically, but nonetheless, I would like to see confluence with a few other indicators in which I associate a little bit more respect with, like the hash ribbon indicators and the MVRV Z-score. I will be keeping you updated on these. The second one of these flips bullish, I will probably be flipping more bullish as well. For example, if I see the Z-score and the hash ribbons have a bottoming signal in which the Z-score once again blasts above that 0.01, no, it's not 0.01, yeah, it is 0.01, so 1% of that region down there. Once it pushes above that MVRV Z-score value, I will keep you updated on that. If that happens in confluence with the hash ribbon indicators having a bottoming signal, I will become very, very bullish on Bitcoin. But until that happens, I will be sticking with my bearish bias. Once again, we looked at the TA in a video that I will be uploading just before this one, and nonetheless, it doesn't look like anything's changed. I would also like to highlight, a lot of people, I think, basically is saying, you have to buy now, otherwise you're going to be poor. If this is the bottom, it's just going to rip straight up to 100k and you're never going to get another good chance to buy again. However, you look at the weekly time frame and you can see the money flow index is still completely beat down. The RSI on the weekly time frame is still in a massive downtrend. Once again, money flow index is one of the most powerful indicators. This is basically the relative strength index that takes into consideration the volume in the market. And because it's taking into consideration all of the volume that's been dumped on its head and the weakness of the volume in the market right now, it's saying we've got a lot more room to move to the upside, especially if monetary policy starts backpedaling again, once the Fed backpedal, of course. But with that being said, things like the MACD on the weekly time frame haven't even flipped bullish, and they're all the way down below the heart line. The squeeze momentum indicator, which is on the weekly time frame, this is a beautiful momentum indicator which takes a lot of momentum to either switch it to a bullish or from a bullish to a bearish bias, or from a bearish to a bullish bias. And this is why you're seeing, even after this run to the upside, just like after this run to the upside, the squeeze momentum indicator was not convinced. It was saying, hey, this is a fake out. It's also saying, hey, this uptrend, if this is a thing, hasn't even started yet. So looking at the on-chain metrics, these are all signals saying, hey, once we cross bullish, you're going to have a massive run to the upside. So whether I was wrong and whether lower price targets are not in play, I still will be buying when these indicators flip bullish, because at some point in time they're going to flip bullish. They're either going to flip bullish very, very soon after running up to higher price targets like 29,000 for Bitcoin, or if what I've been predicting plays out, Bitcoin's going to go down to lower price targets, and then these are going to go down to their completely oversold regions, and then we're going to very, very quickly see these flip back bullish once again, and that is going to be the signal that I need to see to enter these markets. Until these on-chain metrics start firing bullish, until the Fed pivots, until a bunch of other things that we talked about in the episode regarding the TA flip bullish, then I will be sitting on the sidelines. That is all I've got for you today, my friends. A lot of interesting signals saying, hey, the bottom is very, very near. So even though I'm bearish in the immediate short term, and by immediate short term, I am bullish on the price action we've just seen now, I still do think we need one leg to the downside though. But regardless of that, the bottom is very, very near. Whether you're a bull or a bear, these signals are things that we can all collectively agree on. Once you do push to the upside of things like the Z-score and the hash ribbons, then that is probably the time to have a very, very nice DCA order. This is what I'm going to be doing. As always, my friends, all I've got for you today. Calway out. Peace.